Hey, everybody. Welcome to This Week in Pre-IPO Stocks Podcast. With me, I got Nick Fusco, CEO of 8View, a pre-IPO secondary market pricing company, and Clint Sorensen, Chief Investment Officer at WellShield, an outsourced CIO and investment research company. Okay, we got three topics, really interesting ones today, right? We're going to hit the metaverse and AI. Recent IPOs are a success. We had some three big ones that come through. Interested to get your guys' opinions there. And then lastly, just talk about some AI news, some big ones coming up. So, okay, let's hit on this metaverse and AI. All right, this guy, Lex Fridman, has a podcast, okay? He does these really long form, like 2-3 hour podcasts. He interviewed Mark Zuckerberg. He had a third interview with him, this guy, Zuckerberg, who's, of course, the CEO of Meta.
Yeah, this guy.
This past week. Some people may not know. I don't know. Some people may not know. So they did this interview with photorealistic avatars, okay? So they had scanned in pictures of their face and everything, okay, into Meta's tech. They had the Meta Quest 3 VR headset on, and they had the conversation in the metaverse. Now, this guy, Lex Fridman's he's like a MIT professor, right? This guy's smart, like super smart. And he knows, like, he's got an incredible network. Like, this guy's dialed in. He was freaking out. I mean, totally freaking out at the experience, saying things like, this is going to change the world. I'm getting emotional right now. I could have a conversation with my loved one, freaking out. The whole time I'm watching this, I have my investor hat on, and I'm like, this is going to kill the airline industry. It's going to kill hotels. You can work anywhere in the world and be in the office. Zuckerberg saying things like, we're going to do AR, like augmented reality, and you'll be able to hologram people in to a meeting room. And it's crazy. Okay. This is happening right now. And in the next 5 to 10 years, we're all going to have this stuff. It's going to be like an iPhone in everyone's pocket. So,
and Clint and I can attest to you freaking out because we're getting texts over the weekend. The hotels are going down. The airlines are going down. I'm here thinking there's a terrorist attack because I didn't know that.
Oh, no. I got to be a little bit more careful then. I got to be careful.
Aaron nerding out over virtual reality, but
totally nerding out.
It was an incredible video for sure. An amazing interview.
Totally nerding out. Okay, so I'm not sure if you guys saw it, right? But so let me ask you this. If this becomes, if most people have the same reaction as this Lex Fridman fellow did, right? Where they're just blown away about how real it is and how human it is, right? Does that, in fact, am I onto something here where airline, people will travel less and there's less hotel stays? And I mean, I see a lot of corporate travel cutting way back. If I'm paying 10, 20, 30, $40 million a year on T&E and I can cut that in half by getting everyone these, and we do photorealistic, I'm doing that, right? So what do you think? Nick, Clint, what are your thoughts on photorealistic avatars? AI, of course, is in the mix. That kind of what makes all this stuff possible, and the metaverse.
Totally on point.
Yeah.
So for anyone that is an avid listener to This Week in Pre-IPO, you might have heard, half a year ago, that I got suckered into buying these from my buddy who worked at Meta, and I was like, you know what, we can meet, and it was literally he and I being able to talk a la South Park style. It was a bulbous head and a mouth that goes up and down. And to see the interview with Lex Fridman and Mark Zuckerberg was outrageous because it gave the three layers of I don't know what you call the middle layer, where it's picking up every single facial aspect of it, and then you see him in real time, and then you see the avatar going.
Right.
It is outrageously clear, and I think the only thing it was missing was some of how wide his mouth opens or how wide his eyes open. Some of the intonations were a little bit off, but it wasn't if you couldn't see them side by side, and when the interview flipped, I was then uncertain myself who I was actually looking at. It was that incredible, and I think I've only had mine for 18 months or 2 years. So this advancement in that speed of time was just incredible. So I don't think the airlines are going down, and that freaked me out seriously when you did text it.
Sorry about that.
But I forget, and I think it was one of the big four ordered a ton of these, thousands of these, so they can do just that, and maybe that was because of COVID, and they were planning on it. But the leaps and bounds that this has made really show that they want to fight back in terms of what Apple is doing. Apple comes out with some great products and everyone freaks. Meta comes out with some products and people are like wanting to poo-poo it. You can't poo-poo this. This thing was outrageous.
This thing's cool. Yes.
Yeah.
Clint, what do you think, man? Like, I mean, you're living in the public markets, right? As an investor for your clients too. I mean, do you think there's going to be some sector impact to some of these things if people aren't traveling as much?
Yeah, I think we've had some metaverse topic or discussions on this podcast before. And you know my opinion on the metaverse. Number one, I think it changes everything. But in particular, I think it definitely changes anything that takes time away, right? So if you are having to take time away from your life, that is your most precious asset. Yeah. The metaverse is giving you that back. I'm betting against anything that is a time suck for individuals. And I actually am betting for it on the positive end. So instead of what is this going to exclude? Because I actually think it could be a massive wealth creator. And I think airlines and hotels, especially in the luxury end, could continue to benefit if people want to travel and have real world experiences. I don't think that goes away. But I think when it comes to scaling content production, scaling teaching and education, scaling any kind of service-based industry or thought leadership, I think this is going to completely change that game. And I'm really excited about it, especially for someone who's in that field, right? If you think about being a CIO for a lot of different firms, that is a phenomenal way to express content, the ability to deliver that in client meetings in real time. I think, even doing it recorded and being able to have these photorealistic avatars and be in a meeting setting, I cannot wait to see how fast this develops. And I think it'll be indistinguishable. Nick, to your point, how fast it's evolved over 18 months. And you're talking about just very minor details. Think about how fast those will be worked out. This is taking leaps and exponential leaps. And I'm really excited about this in the future. And I was actually skeptical of Meta and their ability to execute on the metaverse because I don't like centralized metaverses. But look, at the end of the day, they've done phenomenal work. And I think we're learning not to bet against Zuckerberg.
Right? Yeah, this is, look, I think it's going to impact. Well, first of all, I agree 100%, Clint. I think folks will certainly use this and get time back. There's also, I think, this like utility of time. Like my folks live in Chicago. I'm in New York, right? If I could, I have 3 little kids. If I could, augment reality them into the dinner table once or twice a week so we can all have dinner together. That's incredible. That's incredible. We could see them every week instead of a couple times a year. You know what I mean? That's a big difference. A huge difference, I think, especially for, small children who, like, honestly, when my kids were little, they couldn't even tell if somebody was real or not real in FaceTime, right? This is going to like blow their minds. You know what I mean? So this is the most exciting thing to me is what Nick said, like, this is happening right now. I think that's so cool. Like we could literally have this stuff in the next 5 to 10 years, just like we had, like the iPhone showed up in 2008 and it's only been 15 years, like 15 years from now, like everybody could be in the metaverse for half their day, right? Doing this type of stuff. So,
and that's a scary thought, but I'll give you the real world example of the business use, right? For bringing down the airlines. I hate the way I read your text over the weekend.
Yeah, I'll write it differently next time.
A fear monger. But I'll give a shout out. I went to a New Data, which is an alternative data conference out in California. I went on Thursday, so flew out, put a ton of miles on, right, and had money on a hotel, things like that. Right. And then I had a few great in-person meetings, and you can't replace that with VR. But then I had two meetings got canceled because they weren't able to show up, and they got replaced by Zoom sessions. And here I am scratching my head thinking, okay, I've had these great meetings in person, which are wonderful, and now I paid the same amount of money, but I'm going home and I'm doing a couple of Zoom sessions this week to make up for the ones I missed.
Yeah, right.
Geez, you know what? If I knew that, maybe I could have done all these in the virtual hosting. And I think we all did some of these virtual events that were really, really freaking clunky. They look like a games casino during COVID, and you'd go from one table to the next. But
Yeah.
I could see that playing out. Why that conference could absolutely be in virtual reality, and everybody would get a kick out of it. Or you could have some really cool stuff going on, and you could be immersed in the demos. You could be immersed and actually free up time because you don't have to wait for your session. Maybe you want to go to a session. It's like Netflix on demand. John is speaking about this, Mary speaking about this. You do one after the next, or you do Mary versus Mary before John. I think that's well said. But that would have saved me a ton of time, particularly even when some of these conferences are just inconvenient timing-wise or distance-wise. So the attendance could pick up too. So more business is getting done than less. So that's
the metric that matters. It sounds like it's time. It's the time is the metric. So this is going to be super interesting. I can't wait for this stuff. I got to be honest. I am geeking out, Nick, 100% on this one.
I'm fully aware.
Right. All right. Let's switch topic. Okay. IPO. So ARM, Instacart, Klaviyo, all IPOed. Okay. In the last 2-3 weeks. So here's some quick stats. ARM went out at $51 a share. It's at $53.92 as of last night. It's up 5.7%, $55 billion market cap. Instacart is at $30 a share. It's at $29.70, so just a little bit less, 1% down. That's nothing. It's $8.2 billion. Klaviyo went out at $30. It's at $35. It's up 17%, $8.7 billion market cap, right? So, look, none of these guys went IPO'd and then went up 100% and hung up there, right? They've all kind of they've bounced around, right? ARM was up from their last round. That was owned by SoftBank, so it's a little bit different, right, than some of these other ones. Instacart was way down. They were at $38 billion. They kind of came out there at 8.2 now, right? And then Klaviyo was at 9.5. That was their fully diluted number. So they've pretty much stayed flat, right, from where their kind of prior 2 rounds were over the last 2 years. I'm viewing this as a success. Maybe we can start there. Clint, what do you think? Are these IPOs winners, right? I mean, they came out and they didn't drop. What do you think?
I think the fact that they got liquidity in the marketplace is a win in a very difficult liquidity environment. I think that's ultimately the test. So the market's open. The valuations took a hit prior to. That's what happens when you drain liquidity from the system at the clip which we did. But they went public, period. That's at the end of the day, that's a win to me. Everyone focused on the post-IPO price. I don't even think you have enough information, especially during the blackout period, to even make those type of assertions at the end of the day. Maybe retail participation wasn't where they hoped. You didn't get, the meme stock bubble of 21. But again, it's a very different environment. The fact that they were able to go to the public markets and raise capital is a victory, in my opinion.
Right. Nick, so Nick, what are you hearing, man? Because I know you're talking to a lot of people that were probably in these names, right, ahead of the IPO. What's the buzz out there from your client base?
Right. So the Instacart thing was interesting because we were getting some phone calls in advance. Actually spoke to someone that worked at Instacart and getting smiles, but I can't tell you anything sort of bit when we were doing our valuation work prior to, because effectively we were getting halfway decent marks on Instacart for the last 3 years, and then it picked up the 3 months prior to the IPO. And when we drew kind of range bounds on there, I think Aaron will be able to cue this up in post production, but we were typically seeing an absolute low of about, 31, but really the range was $33 up to $38. And then on the day, that's the 3 months prior, on the day, we launched with an IPO price set at 30, opened at 42, and settled at 33. And now we're kind of still in that mix. It shows that the pre-IPO data was super reliable on that name to represent where this thing should actually be priced. So I think that has a lot to show with how much institutional activity could be done leading up to the IPO, even though in some cases it's not really wanted or something promoted by the company, and some of those are locked out. But I think to the same extent, I agree with Clint. It's almost too early to tell. You want to see what's going to happen 6 months and a day from now, or 6 months minus a day from now,
right?
And really see how the market reacts, because even what we saw in the last couple of years. A lot of those could start out okay and then fell from grace thereafter.
Yeah, that makes sense. So, I mean, okay. So looking forward now, I guess two questions. One, do you think these three guys going are going to lead to more IPOs coming, right? There's like the discussion about Stripe. There's like Databricks. They just did a round, so maybe they're good for a while, right? But Reddit, I mean, there's a number of companies that could come, kind of quickly after. Do you think that, what are your thoughts there, Clint? Like, do you think some of these guys CEOs might pull the trigger?
Yeah, I mean, I think there's a lot of companies out there that need to raise capital. I mean, I've been hearing just in the private business space and private real estate too. Everyone's saying the same thing: survive till 25. That's not, that's not a good mantra for running a growing business. So I imagine capital raising is always a need, and I think you're going to have some that are just of size that they need to go tap the public markets and. Seeing that they're open for business, I think could generate some activity.
Yeah, and so Nick, I mean, Clint was kind of mentioning earlier that liquidity was important, right? I mean, these companies, Reddit, Stripe, Stripe had this huge, like, kind of wonky round where they had to get a ton of money fast because they had employees with options expiring and they had a tax issue
Right.
and the whole thing. Right. I mean, do you think that just like some of these folks might say, all right, we're just going to go, like, they might need capital, like Clint said, but some of them don't just want liquidity, right? What do you think?
Yeah, so I'm going to be a little bit more muted and suggest if they can service what they need or what their internal employees need as well within the private markets, and that framework and infrastructure is going to be there, and it's there today more than it was 6 months ago and more than it was a year ago. I think some of them could maintain that private structure for longer.
Right.
I hope they can, actually. I think that'd actually be a pretty cool thing. But to a certain extent, I mean, folks do want to IPO, and also to a certain extent, we talked about the way if a company gets acquired, it very negatively could impact the common shareholders, which are the employees. So even if the employees can get liquidity, at what terms, maybe it is better for the IPO. So every company is going to be a little bit different in figuring out what that trade-off is. But where there's a big disconnect between the preferred holders and the common, I mean, I'm rooting for IPOs. And where there's been a really thoughtful cap table and they could just continue and have a better life as a private company, then I'm kind of rooting for that too. Just depends.
Do you think that these companies going and then kind of settling in at their IPO levels is going to impact where trades are going to get done in kind of the private secondary or maybe even primary rounds? Like, some of these companies still haven't done a round since from 2020, 2021, right? When things were much higher. Do you think it now kind of like locks it in, saying like, look, things aren't going back to 2020 again? That was an outlier.
I think we know
right?
that. Yeah, I think we know that already.
Well, I think a lot of people feel like that's like a given. I don't know. I bet there's some psychology with the CEOs being like, man, if things could just turn around, if the Fed cuts rates, if like whatever happens, we could go back to where we were. We could grow out of it, whatever, right? Grow into it, I should say, right?
Yeah, I mean, there's always going to be one really good hype sector that's either going to be a fad or a trend. So right now we're piling into AI stocks, and you're seeing that reflected. Like the AI stocks that we observe at ApeView are just outperforming everything else, like for the last 6 months, and it's been phenomenal. Right? You see that with the repricing at OpenAI. You kind of see that with a bunch of different names. Actually, sorry, I'm getting ahead of ourselves. I think that's a topic for like 5 minutes.
It's okay. No, it's relevant. Let it rip. Let it rip.
So that's really, really inspiring and encouraging. But for all names, I don't know if that's going to be the pace of things, and if the Fed comes in and starts bringing rates down again, I think we're all going to be happy, except for maybe some of the guys that are focused more on the credit side that might be confused or not expecting it. But I think you're only going to have hype in certain areas that folks are really focused on rather than across the board, which is exactly what we saw in 2019, 2020, and part of 2021, where it was just like, hey, oh, it's private. Oh, it's going up. You know, now it's, okay, it's private or it's public. And now we're going to
some
really
rationality.
focus on, I mean, even if you look at the public markets, if you're looking at NVIDIA, that thing's just crushing it because it's in the right sector and it's doing the right things and it has untapped potential. And I could actually wax on that for probably too long. And interesting to see the Amazon news and what they're doing in that space too. But yeah, it's really, if you have the right technology and the right team to build, that's what's going to perform. And that's kind of the way life or stock observation should be in my world. It's not just, hey, you put .com after your name and you're killing it now. You know, we learned that lesson a little bit too hard.
Yeah. So Clint,
now it's .ai.
Now it is.
Yeah. I mean, so Clint, I don't think it's a market clearing event. Like, I still don't think we've seen that quite yet in the private secondary, kind of stock market. But I do feel like this helps, right? This does help bring buyers and sellers closer together a little bit.
Yeah, it's a sign things aren't broken down, right? Completely locked up. And I think that's, it's always encouraging. I think we got to look at those silver lining, that silver lining as much as possible. And again, I don't think people quite understand how difficult the environment is. It is, when you look at bank tightening, when you look at the Fed tightening, we are really in a pretty unprecedented situation in terms of the speed with which we've tightened, not only liquidity, but credit access. And I think that any time you can get a victory and there's access to liquidity and liquidity providers coming in, and it's not a complete, destructive event, I think you got to celebrate it. And I think that's the way I want to look at it, at least. And again, to Nick's point, and we both echoed this comment, I don't think we'll know enough right now. We know enough right now to kind of opine on the public's interest or whatnot. But I think the fact that there was 3 successful IPOs back to back to back is nice.
It's a good thing. That's cool. All right, let's shift gears to AI. All right, so we got OpenAI with an announcement of doing a $90 billion valuation. They were at $29 billion was the last primary round. That's a big jump, right? And then Anthropic comes out and announces that Amazon's doing a $4 billion, quote, minority stake at an undisclosed valuation. So we don't know what it is, but it's a minority stake. So it's got to be north of 10, I would think, right? $10 billion valuation. They're also AWS is going to be the cloud. They're going to do cloud and chip provider for them, and they're also going to sell Anthropic AI through AWS. Their customers, kind of very similar to what OpenAI is doing with Microsoft. So I'm seeing that these companies are getting like a 30x revenue multiple on like forward revenue, which is kind of not a thing. I just perhaps making that up, right? But forward revenue. So what is the revenue going to be in 12 months time? And let's multiply that by 30x. And that seems to be where these things are settling in. OpenAI announced a couple weeks back that they were at $1 billion of revenue for this year. That would make that $29 billion valuation that they had in the prior round good, and that they're going to do a couple $1 billion next year in revenue. That would make the $90 billion valuation make sense if it was a $3 billion in revenue. So it's like a very interesting thing. Here's the thing. Where do we think these things are going to go? We got Cohere with Oracle. We got Anthropic now with Amazon. We got OpenAI with Microsoft. Those are 3 of the big 4 cloud providers. And of course, Google has their own AI, right, for Google Cloud. Is it fair to say that those 4 are going to be winners? And then, of course, there's the picks and shots. Like Jasper just announced that that was another AI shot. They did an internal valuation down round just this week. Okay, so is it fair to say those 4 are probably going to be the winners? They got the big alignment with the big cloud providers, and then of course there's like the picks and shovels place, right? So all the people that are coming in to help, build out this ecosystem, which I think there's probably an interesting opportunity there. But do these valuations could they run? Could OpenAI go north of 90 billion? Like what's some thoughts there, Clint?
I mean, yeah, sure it can, but the math is pretty difficult, right? If you think about just think about what a 30x sales multiple means. That means that for an investor, I have to get 100% of revenue paid to me in the form of a dividend for 30 years to justify that investment.
Yep.
That means no capex, no research and development. Now, the the common retort to that is, oh, but you can grow. All right, so they grow revenue 100%, or they're projected to grow revenue 100%. They've got to really hit a hockey stick growth rate, all of these companies, to justify these valuations. So is it possible? Absolutely. Is AI accelerating everything? Absolutely. I'm bullish AI and everything, but yeah, I think these valuations are just outrageous. But maybe that's just the nature of the beast. I mean, look at Nvidia. Nvidia is a public stock market company trading at, what is it, 38, 39 times sales. I mean, this is we've never seen anything like this. We've never
By the
seen
way,
anything
all the
like this.
VC guys I talked to, Clint, are saying that they all point back to Nvidia, and they're like, "That's it," and they're like, "And that's the chip company." Then they always end it. They always end the statement, and that's the chip company. Like, like the AI companies themselves are going to be even better than that, right? So, I mean, it's pretty special.
It's epic. I can't wait to see what the growth rates look like. I mean, these are so early stage, right? I don't want to be a naysayer on them. I think they're phenomenal. I do think those four companies have the best shot because they're platform based, and I always think that the platform based companies have the best shot at survival because you have the ability to adapt a little easier than something that's a little more specific. I personally think the better valuations are in the picks and shovels plays. And in particular, some of the data plays. But look, these four platforms own all the data, so all the cloud service providers. I kind of I mean, I think the sky is the limit for these things, at least for a while, and it's very compelling. Earlier you get in, probably the better here.
Okay, so that's an interesting point, right, Nick? So like maybe you get in, you take advantage of this pop, right? Like Clint's talking about, and then you can get out in the secondary market, right? I mean, you got to be seeing some decent liquidity in some of these names, I would think, or at least there's a lot of buy side demand, right? Maybe not so many people selling, but at least a lot of people wanting to buy. Is that fair?
It's ebbs and flows, actually. So
okay,
it's super weird. Some of these names, it will just be extreme buy side demand, then sellers, then back to buyers, then it's actually relatively tricky to I'm not going to be able to predict what next month is going to bring for any of these
interesting.
Names. Yeah, but I think by the picks and shovels or the infra portion, I've always said that the big winners, it doesn't matter almost which of these AI companies is prevailing. Like they're all going to do great, I hope. But Amazon's going to make money. Google is going to make money. Microsoft is going to make money because they're so pervasive. So I think everyone's just being extremely strategic in terms of what assets they have, and I think Clint nailed it with data being an asset as well. So and the models have to be an asset. So Amazon also partnered with Hugging Face, I think back in Q1.
Great name.
I love the name, right?
Best name in the business. Hugging Face.
About as dumb as Ape View. But
come on.
But they host like 500,000 AI models, and then like 250,000 data sets apparently, and they allow users to kind of do open source to access that and work it. But guess what? Who's making a ton of money off that? Where's the monetary portion? It's the compute power, and being able to push that through compute, being able to push that through AWS, which is now the preferred vendor for them, or is it going to be Google, or is it going to be Microsoft? No matter what, anything that drives compute is going to have the distance between AWS, Microsoft, and Google just keep going. So there are no other players that can compete there. So I always focus on the other stuff, the who's really making every part of your process when you get involved with AI easier. Yeah. And it's always going to be those cloud providers in my view. But
they're really well positioned. Yeah. That is true.
Over the long haul, if I look out 10 years, they're not going to fail. Right. Yeah. And we've talked about the makeup of the NASDAQ or the Dow Jones, or like whatever, S&P 100. And that's super different today than it was 20 years ago. They're here to stay, in my view.
Yeah, I mean, there's like massive tidal waves of emerging tech coming, and like everybody can see them. It's really, as investors, I think it's just an incredible opportunity, right? I mean, just on this thing, we talked about the metaverse, we talked about augmented reality impacting to other sectors that have nothing to do with like tech, like airlines and hotels, not properly, right?
Right.
This time AI, I mean.
Well, maybe that's our answer, Aaron. It's like, who's going to win? Is it Jasper or OpenAI or whoever? Actually, no. Who's going to lose is Marriott, Hilton, Spirit Airlines, Southwest, and maybe that's our answer, right? To a certain.
Oh, you want short? Just short those guys. Is that what you're thinking?
And office space.
Office space can get crushed.
We saw that article about office space. It's already crashing in a lot of areas. I mean, now you've got.
Come on, WeWork can't crash
this.
twice,
just
can
another.
Yeah, we bankrupt twice. Yeah,
we crashed too.
Yeah, that's right. That's right. Yeah, this is just the last 15 years have been incredible, I think, for technology, right? I mean, the 15 years before that was the internet, then it was the iPhone and apps, right? And this next 15 years, I think, is going to be just completely mind-blowing. I mean, you hear these guys talk about what AI is going to be able to do with like the metaverse and also devices, right? Like hardware that we're going to be able to have access to as well. I mean, it's going to get, I feel like the internet allowed people to get a little bit closer together. Most of that was tech driven. The iPhone and apps, I think, I feel like it's kind of removed the humanity away from technology. But this next phase that's coming is going to be, I think, very human. Right. And
unifying individuals, building community. I love that.
I really think so. I really think so.
And I think big mission, right?
That's right.
That was the mission.
That's right.
That was the vision.
And I think you're right, Clint. It's going to be a huge time saver, right? And it's also going to allow people to like spend time with like higher quality time with people that they really want to spend time with, right? Which is just so powerful. So it's just going to be fun, man. As like an investor, I'm like salivating on like where the opportunities are. This is why it's so, I mean, honestly, selfishly, not to talk my own book, but this is why I wanted to do the VC thing. Cause I started to see some of this like stuff sprinkling through, and it like the big waves are starting to form now. You can really start to see them shape up. So man, you can get your hooks into some of these companies early. It can be really special, I think, to create wealth. Like you were saying earlier, Clint, okay, cool. Let's end it there.
Some cool stuff, right?
Go ahead, Clint,
connecting humanity. And the cool stuff, right? You're connecting humanity. You get to play a part in connecting the world, which I think is just phenomenal. I mean, who wouldn't want to do that?
There's a lot of good.
No, I'd like to isolate the world, right? I'd like to just be isolated. Yeah, exactly.
Well,
it's a lot of good.
A lot of people don't like their kids using tech, right? I think this next 15 years, it's gonna flip because it's gonna get very human and very like physical, right? Augmented reality. You can go out to the park and play by yourself against the, Real Madrid. You know what I mean? Like it's gonna be fun, man. It's gonna be really fun. So, all right, cool. Well, gentlemen, I appreciate your time. Thanks so much. Thanks very much to this, and look forward to speaking with you guys next week.
Great stuff.
Yeah.
Okay. All right. Cheers, fellas.